Welcome to Herd Mentality, a podcast from StoneX where we discuss global dairy markets and what's driving them. Remember that the trading of derivatives such as futures, options, and over-the-counter products or swaps may not be suitable for all investors. Derivatives trading involves substantial risk of loss, and past results are not necessarily indicative of future results. We're recording this on Monday, June 2nd. With me this week is Dave Kurzawski. He's team lead dairy team out of the Chicago office. And I wanted to talk about the U.S. market this week because it's been a very active and volatile market. We've seen significant strength in spot cheese, which CME blocks increased about 38 cents from their low back in March to their highs last week. CME spot butter increased about 28 cents from their lows in late April to the high here last week in late May. And we've seen futures also rally, with nearby class 3 up about $2 a hundredweight. And there has been some volatility in here. We've rallied for a couple of days, and then the spot market might sell off, or the futures might sell off, and then the strength has come back in again. It's been surprising strength to me, especially on the cheese side. And to me, it looks like a demand-driven rally. The milk production data for April was a little bit stronger than expected. Headline production in the U.S. was up 1.5% from a year ago. That was a little bit better than the 1.2% forecast. We've added 102,000 cows to the herd in the past 10 months. And the components in the milk are running strong. So component adjusted production is up about 3.1% from last year. The supply side looks pretty good. So if we're seeing this strength, I think it's demand driven, and logically, given how big the spreads are between the US and the world market on both cheese and butter, exports are probably the stronger component in the demand equation. That's my take on it. Dave, what do you think is driving the cheese market over the past month or two?
Yeah, thanks, Nate. Good questions. Good questions. And it's kind of, I don't know if it's symbolic of anything that we're doing this on June 2nd, the first business day of the new FMMO pricing. But I would say that it's been pretty interesting over the past, well, really ever since ADPI. ADPI was probably more mixed in terms of sentiment, depending on who you were talking to in the hallways. Sometimes you come out of those meetings and you have a real good view of whether right or wrong, but it seems like everyone's leaning one way, and that wasn't the case this year. And we came out of that. I would say I think you're right about demand. I think exports are really strong, or have been really strong. And I think we've probably seen a little bit of an uptick in even domestic demand, but marginal only. And so those are two good areas. But if I look at the futures market versus spot for both cheese and butter, I look at this, the demand that I've seen that's been really red hot has been a demand for futures contracts or derivatives. It's been a demand for hedging, upside risk. It has been less a supply situation that we have on the physical product, and you can tell that because futures have led the rally. It started first with cheese, and then it migrated over into the butter market here over the past 2 weeks or so. But the cheese futures market really started to catch a bid, in early May, and that kind of drives, suddenly all of a sudden, you've got spot cheese at a 15-cent discount to the nearby futures. You're going to encourage some opportunistic trade there, where you can buy physical and sell futures and wait for the markets to converge. You still have to deal with the physical at some point, but I think that drove part of what was going on here. And why? So then, why did we have this big demand for futures? Well, I think there was the clock is ticking kind of thing. When the prices were coming down for cheese and cheese futures and class 3 in March and early April, I think a lot of people covered their Q2 needs. They bought the entire way down. but they didn't cover much beyond that. And I think you got past April and you saw, some firming of the market. Maybe the market initially got started with stronger exports. And then there was a fear of missing out that kind of, bur- you know, grew from there. So I think the bid in the futures market underpinned spot for both cheese and butter. And it was first with cheese. And I think that's the dynamic. So now we've made that move. Now the next question is, do we have to continue to go higher? We've gone, you said what, 38 cents? We've gone from $1.70 to $1.95 here in the last 6 weeks on spot cheese. Uh, where I think where what's the next shoe to drop? Where do we go from here? I think if there's really good demand out there in the country, we can go over $2. If I look at the technicals on, spot block, I would say we're going to go over $2. If I look at the fundamental piece on the market right now, just, kind of what I'm hearing anecdotally, the availability of milk this time of year as we roll into June, I would say we're probably going to trade sideways, maybe even a little lower on spot block. We've made this move up, and futures have led the rally. Spot never took over as the leader on price. That tells me that we're not short of actual product. And I would expect the market's going to have to calm down here a little bit and chop sideways. But if I just look at technicals, I think you're going over $2. From a fundamental perspective, we could still probably do that this year, but I think it would be later this summer on a whole new series of news cycle.
I always struggle a little bit with the idea that the futures are driving the cash market. I can understand the idea of a cash and carry trade where you're buying that cash market and selling the futures. And, honestly, the volume that trades in the spot market, you could easily buy that and easily sell the futures. So, from a practical perspective, maybe cash and carry drives more of the activity than I think. But your idea that there's been good demand for futures is interesting because we've also seen European cheese and butter um, contracts for the second half of the year increasing quite a bit, even as the spot market, at least on the cheese side, was relatively flat. And it felt like buyers were looking at the calendar, seeing that we're at or past the seasonal peak for milk production, and they were hoping for more downward pressure on the market, which I think has been true for the U.S. as well, and saying, well, if we haven't seen it yet, maybe it's not coming, and it's time that we put on some coverage for the second half of the year. And you're, you're saying that the futures, at least on, well, for both cheese and butter, are leading the spot market, and I can see the logic there as well because the nearby futures have been holding a decent premium to the spot market. So if the futures are constantly predicting higher pricing for the spot market, I guess and then the spot market goes up. Um, that is a pretty good lead to what's happening in the spot market. The only thing I would say, like on the cheese side, I agree with you that above two is a real possibility. Like if my theory is right, and this is demand driven, specifically on exports, what price do we have to get to kill off some of that demand? And we still have European cheddar at 240 a pound, GDT cheddar at I think 220 or 230 a pound. So we probably need to run the spot market up to 220 type pricing if we need to kill off some demand in a hurry. I that is the risk. I don't think that's going to happen, but it's a strong possibility. At the same time, the U.S. cheese fundamentals don't look all that bullish on their own. Yes, exports should be good, but domestic demand is running below year-ago levels. Cheese stocks are improving from -7, -8% late last year to only being down 2 or 3% here in April. Um, the the inventory itself would justify CME blocks closer to $1.80 a pound. So I'm not particularly bullish on cheese at this $1.95 level, but I do see the risk of 220. What's interesting to me on butter is the butter stocks for April were much lower than expected, 33 million pounds lower than expected. And the stocks to use ratio here would support a price up at 260, 270 as we get into June, and the market's still at 250 a pound. So I think there is some fundamental justification for the strength that we've seen in butter, not just demand for futures.
Yeah, yeah. Wasn't that long ago we were saying protein was the new fat. We might be back to fat is the new protein or something. I don't know. Or maybe just that people love dairy. Um, now I would say that I told yeah. I mean, I agree with your sentiment on the market overall, and the demand having improved, and certainly for butter, the numbers would bear out strength. I find it interesting on the spot market for both cheese and butter that there's loads always for sale. So we came up and there was trading pretty much the whole way up. Now there were times where it was a little lighter than other times, certain days, and that actually speaks to this cash carry trade that we're talking about. So the cash carry trade, I think when the spreads get really wide, as they had on cheese a month ago, and even now to some degree, well, not really so much now, but at butter in the past week, there are some opportunities to buy physical and sell futures. Um, People say that all the time. What they don't talk about is how that trade really gets unwound, or what needs to happen. And so we had a little bit of insight into that going back 2 weeks from today, basically. At that time, for whatever reason, the spot futures spread, I think, was on Monday or Tuesday of that week, was about 5 cents between spot and June futures, and I think July was not too far away, maybe 7 cents on cheese. And we were in the 190s at the time. We've been in the 190s now, flirting with the 190s, for 2 weeks. And 10 loads came, or 11 loads came for sale that day, 10 or 11 the next day. So, it seemed to be like, you know, folks that had been buying were turning around and starting to unwind that trade. When the trade no longer works, you start to unwind it if you can. Whether you can sell it in the country or you can sell it on the exchange, whatever, you just start to unwind the trade. You don't have to stay in it for life if you can get out of it. And so that selling kind of went away shortly thereafter. We had been down in high 180s, and then the market kind of bounced back. So and here's the other thing too. We finished out May at $1.95 cheese, which is a 7-month high for block cheese. So like the price behavior is still strong, despite the fact that spot hasn't been leading this rally, which would reflect like, hey, there's cheese out there. I think there was also a moment in time, and maybe this hasn't played out yet, that people are concerned about the new pricing structure. We're getting rid of barrels as far as its contribution to the milk pricing, and I think that plays a role too in people feeling like, hey, who are the natural sellers in blocks that are here all the time? Because we kind of know who those are on the barrel side, but it's a little bit more sporadic on blocks. That was the concern maybe 2 weeks ago, and then over the past week, we've seen people, a myriad of different sellers, physical traders, manufacturers, selling cheese here in the 190. So, I mean, I think we have product. The market's telling us we have the product. That's why spot is not above the nearby futures. Um, doesn't mean you can't go up though. It just means we've got product, and I think the same story is true of butter.
I, as you're speaking, I looked up the stats. In the last 6 trading days, we've traded 78 truckloads of butter on the spot market. There's been no shortage of physical product that they've been able to shake free as that price has rallied. So that is another feather in the hat of the futures leading the spot market theory. With that, Dave, I want to thank you for your time today.
Thanks, Nate. Appreciate it.
The StoneX Dairy Team spans the US, EU, Asia, and Oceania, providing market intelligence, analysis, and forecasts through our interactive data platform called StoneX Plus, as well as full-service brokerage on the major dairy exchanges, the CME, EEX, and SGX. If you're interested in finding out more about our market intelligence or brokerage services, you can find more information on stonex.com.
This communication is issued in the European Economic Area by StoneX Financial Europe SA, SFE by the SFE presenters noted. StoneX is the trade name used by StoneX Group Inc. and all its associated entities and subsidiaries. StoneX Group Inc. companies provide financial services worldwide through its subsidiaries, including physical commodities, securities, exchange-traded and over-the-counter, under derivatives, risk management, global payments, and foreign exchange products in accordance with applicable law in the jurisdictions where services are provided. References to certain over-the-counter products or swaps are made on behalf of StoneX Markets, LLC SXM, a member of the National Futures Association NFA and provisionally registered with the U.S. Commodity Futures Trading Commission CFTC as a swap dealer. SXM products are designed only for individuals or firms who qualify under CFTC rules as an eligible contract participant (ACPAT) and who have been accepted as customers of SXM. Wealth management is offered through SA Stone Wealth Management Inc., member FINRA/SIPC, and SA Stone Investment Advisors Inc., and SEC Registered Investment Advisor, both wholly owned subsidiaries of StoneX Group Inc. StoneX Financial Limited SFL is registered in England and Wales, Company No. 5,616,586. SFL is authorized and regulated by the Financial Conduct Authority registration number FRN 446,717 to provide to professional and eligible customers including arrangement, execution and, where required, clearing derivative transactions in exchange-traded futures and options. SFL is also authorized to engage in the arrangement and execution of transactions in certain OTC products, certain securities trading, precious metals trading and payment services to eligible customers. SFL is authorized regulated by the Financial Conduct Authority under the Payment Services Regulations 2017 for the provision of payment services. SFL is a Category 1 ring dealing member of the London Metal Exchange. In addition, SFL also engages in other physically delivered commodities business and other general business activities which are unregulated and not required to be authorized by the Financial Conduct Authority. StoneX Financial Europe SA, SFE is a securities trading firm registered in the Grand Duchy of Luxembourg under Company No. RC Lux B 10821. SFE is authorized by the Luxembourg Ministry of Finance and regulated by the Commission de Surveillance du Secteur Financier Registration No. P00000 to carry out, inter alia, the activities of investment advisor, portfolio manager, professional acting on own account, broker in financial instruments, and commission agent. StoneX Financial Pte Ltd Co. Reg. No. 201130598R SFP is regulated by the Monetary Authority of Singapore and is a capital market service licensee for dealing in capital market products, an exempt financial advisor for advising on investment products and issuing or promulgating analyses/reports on investment products, and a major payment institution for cross-border money transfer service. StoneX Financial HK Limited C. No. BCQ 152 SHK is regulated by the Hong Kong Securities and Futures Commission for dealing in futures contracts. StoneX Group Inc. acts as agent for SFL in New York with respect to its payment services business. StoneX Financial Thai Limited, SFA Akin, 141774727 holds an Australian financial service license and is regulated by the Australian Securities and Investments Commission AFSL, 345646. StoneX Securities Co. Limited, SSJ Co. Reg. No. 0104010471999 is regulated by the Japanese Financial Services Agency as a Type I Financial Instruments Business Operator. Kanto Local Finance Bureau FIBO No. 291 is a member of the Financial Futures Association of Japan for dealing and broking FX and FX option transactions, and is a member of the Japan Securities Dealers Association for dealing and broking stock indices and option transactions. The information herein is not a recommendation to trade nor investment research or an offer to buy or sell any financial product. It does not take into account your particular investment objectives, financial situation, or needs, and does not create a binding obligation on any of the StoneX Group Inc. of companies to enter into any transaction with you. You are advised to perform an independent investigation of any transaction to determine whether any transaction is suitable for you. This material should be construed as the solicitation of an account, order, and/or services provided by the FCM division of StoneX Financial Inc., SFI NFA ID 0476094 or StoneX Markets LLC SXM NFA ID 0449652 and represents the opinions and viewpoints of the individual authors or presenters and does not necessarily reflect the viewpoints of SFI or SXM. It does not constitute an individualized recommendation or take into account the particular trading objectives, financial situations, or needs of individual customers. Additionally, this material should not be construed as research material. The trading of derivatives such as futures, options, and over-the-counter products or swaps may not be suitable for all investors. Derivatives trading involves substantial risk of loss, and you should fully understand the risks prior to trading. Past results are not necessarily indicative of future results. All references to and discussion of OTC products or swaps are made solely on behalf of SXM. All references to futures and options on futures trading are made solely on behalf of SFI. SXM products are intended to be traded only by individuals or firms who qualify under CFTC rules as an eligible contract participant ECPA and who have been accepted as customers of SXM. SFI and SXM are not responsible for any redistribution of this material by third parties or any trading decisions taken by persons not intended to view this material. Information contained herein was obtained from sources believed to be reliable, but is not guaranteed as to its accuracy. Contact designated personnel from SFI or SXM for specific trading advice to meet your trading preferences. SFP may distribute analysis/report produced by its respective foreign affiliates within the StoneX group of companies pursuant to an arrangement under Regulation 32C of the Financial Advisors Regulations. Recipients should contact SFP at 656-309-1000 for any matters arising from or in connection with this podcast. No part of this material may be copied or duplicated in any form by any means or redistributed without the prior written consent of StoneX Group Inc. The podcast herein is not directed to or intended for distribution to or use by any person or entity who is a citizen or resident of or located in any locality, state, country, or other jurisdiction where such distribution, publication, availability, or use would be contrary to law or regulation. Copyright 2024 StoneX Group Inc. All rights reserved.